All right, we are live. We are back in full force. You are tuned in to the end of day report with yours truly, Dex, the algo capitalist, aka the Vulcan, coming to you live from PulseWave home of the most powerful trading reports in the world. Come see what those post-wave price trigger reports can do for you and yours. Man, I tell you, what a day this has been. We're talking about price depreciation. We're talking about price movement. We're talking about money flows. We're talking about volatility. Just incredible price action today in these markets. And it started early in the morning. That's when it started. And it stayed that way all day. Now, we already knew what was coming. Because if you recall, on Friday morning, I gave you the information that was needed on where the markets needed to close, on Friday. And I also told you if they did not, that there was going to be a door swung wide open for falling prices into this week. Well, lo and behold, it happened. Markets did not do what was anticipated or expected to stave off this sell-off. Markets did have a chance, and they blew it. Now, I know a lot of people are going to be listening to the news tonight. There's going to be all types of talk. They're going to say that coronavirus scares are spooking the market. They're going to use words like collapse. You're going to hear words like pandemic. You're going to hear all types of stuff. And I'm going to say to you, nonsense. That's right. Nonsense. All right. The media, along with the powers that be, they like to not blow opportunities to scare people into action. Not just any action, but the actions that they want you to take. There's certain things they want you to do so they can easily pass legislation to make it happen. They want to make happen things that they already want to make happen, but they want you to feel like it was your idea. So they're going to give you the idea they want you to have, and then they want you to run with it like it's your idea. Okay? That's pretty much where we are right now. So we're gonna take a look at some of these charts so that you can get an idea as to what is happening. Sometimes it's not always as bad as it looks, but then other times it's exactly as bad as it looks. All right. So we're gonna look at some things, and then we're gonna discuss it, and then we can take a look at some of your requests. We won't spend too much time on that, but I'll take a look. You know, people love to throw up a lot of willies. Can you check this? Can you check that? And we'll be here all night. But I'll take a few requests and we'll look at it. It's been a long day. I ain't gonna front. I'm tired. I want to chill. But I would be remiss and derelict in my duties if I did not bring you the fullness of the reports. Now, as I'm talking to you, the Dow is now up 200 points. Okay, Dow futures up 200. NASDAQ futures up almost 100. They're up 92 points. The S&P 500 is up 25 points. The Russell's up 16. Bitcoin futures are up $35. And your crude oil has now bounced back a whopping 7 cents. And your bonds are now down 18.30 seconds, but still holding that 166 handle. Gold is now down a whopping $26.50. And I mean, these markets are crazy, folks. All right, so let's jump into it. Let's look at these charts. Let's see what's going on. The volatility is here to stay for a while anyway. Whether the fear of the pandemic is real or not, or made up or contrived or a mixture of all of that, not for me to say. I'm not a virologist. I just look at things and try to do knowledge to it, try to look at the facts versus the truth and reality of things. And at the end of the day, man, I mean, it is what it is, right? But I'm going to tell you what's going to happen. Excuse me. After some time, this too will pass. And then they'll find something else to talk about. All right. And then at the end of the day, if you didn't plan to prepare, then you missed an opportunity where you could have profited off of the nonsense. Just saying. All right. So the first chart we have here is the Spider ETF for the financial sector. It's XLF as in Frank. By the way, someone asked me about Frank, and they were like, "We haven't seen much of him." Well, he's been busy, man, in the background. You know, he's a busy man. You know, PulseWave trading, we got a lot of things popping. So he's building that infrastructure and doing his thing. The man wears many hats and does a lot of work. And without his hard work, he would not be receiving all of the awesomeness from PulseWave trading that you are receiving. Just remember that. All right. So anyway, looking at this select spider, you can see this huge gap. Look what the markets did. And this is something that I was warning you guys about on Friday. Thursday and Friday, I was warning. I was warning. And then I did more warning and then more warning after that. If you recall, we had this primary crash alert here, right? And I told you, I said, just chill. You got 3 to 5 days for this to work out. I said that here. You know, I said, all right, look, hasn't played out yet, but it's going to. I said, you're going to see it. What happened? 1, 2 days went by, and then boom, on the third day, sell off. We ended the week with a crash alert, a secondary crash alert, and I warned that if the support did not hold, I said, it's looking like, based on the momentum of this thing, that it's about to fall off of a cliff and put in another leg lower and get into this Kumo cloud. Remember I said all that? If you missed it, go back and listen to Friday and Thursday's reports and you'll see what I'm talking about. Oops, that's hilarious. Good looking out, Justin. I just get talking and carrying on, and I done forgot to even show you a chart. I'm just rambling on, and you don't see nothing but an alien in the background. My bad. Sharing is caring. That's what Mama used to say. So let me go ahead and share with you so you can see my screen. My bad. I didn't mean to do that to y'all. All right, here we go. So as I was saying, this little thing right here. Whoops, went by too far. All right, so remember, this was the original crash alert. The following day, it did not manifest, and I said, just hold tight because it takes 3 to 5 days to manifest sometime when you get these initial alerts, right? And the next day, we got this, right? So 1, 2, boom. On day 3, not only did the market put in a leg lower, but we got a secondary crash alert. Now, this is Friday. Remember, I told you, I said, this thing is looking like it wants to fall off of a cliff. And I said it's threatening to drop below the trend line support, looking like it may not hold based on the acceleration. And here we are. The market fell, and it didn't just fall, but it fell below the Kumo cloud on one go. One day you're here, the next day you're here. Wow, right? Below the Kumo cloud. We finished, we started here, we finished here. That's a massive gap, but that's devastating price action. And this is the select spider. This is the financial sector select spider. The algo charts warned here, and then we go here. That is what you call a catastrophic movement. And that's what you saw, catastrophic movement. We are now officially topped out in the XLF, and we're rolling over with momentum. And we're now officially bearish. We switched from a bullish bias to a bearish one. And here's your little grizzly bear in the corner going, rawr. He's growling. Now, at some point, we got to come up here and fill this gap. But the way the markets have been behaving as of late, who knows when that will be? We don't know. Moving on. Taking a look at TVIX. Haven't really looked at TVIX in a minute, in a hot minute. Let's see here. Now, for me, the volatility shares lost all my respect when our beloved volatility shares went off the radar. So I said, forget it. And I don't even really watch the thing no more. TVIX had a twin brother called, I think it was XIV, if I'm not mistaken. And that one was great because whenever the stock market moved up, you could go long that particular ticker and just keep pace with the market. It was like an S&P 500, if you think about it. It was like a SPY. That's the way it moved. But now the TVIX is like pretty much designed to go to zero. So even when the markets get a big move like we did today, all it did was just hit the bottom of the Kumo cloud. That's all it did. And then you still got this gap back here. So yeah, I know we had the initial rally alert back in here, secondary alert right here. And yes, it did take off. But is anyone going to really look to hold this long term? No, look, it's just been going down and down and down forever. Forever. I'm trying to find when it was above the Kumo cloud. I don't see it. Okay, so we're back here. Back in 2018. So 2 years ago, you were above the Kumo cloud. But you didn't hold it. You fell. The thing's been falling for 2 years straight. Terrible investment vehicle. Just had to show you guys that real quick. Volatility, things are just dead. All that, the VIX, all that stuff is dead. I just had to show it to you. All right, here's TLT. So looking into the bonds now. We have the secondary rally alert right here. Market exploded, all right, with gaps. Gave you a gap here, gave you a gap here, gave you a gap here. All right, and yes, we still got a gap back here and a gap right here. At some point, the exploding bonds have to come back down to earth. We'll see what happens. Treasuries are a little shaky because, you know, all of the government control and manipulation of this market made it very difficult to get a handle on things. So right now, if you're long, you're good. If you're short, I'm sure you've already blown out your account. But right now, these gaps have to be reconciled at some point. So watching this one for our next signal. Right now, there is none but long positions. So if you're long, make sure you got your stops in place to lock in some of this profit. All right, so bonds continue to the moon. All right, so now we're going to look at the futures. Here's the Russell futures contract. I just want you to see this. Now, We had this initial crash alert back here, followed by a secondary alert. We went down. Then we got a primary rally alert letting us know that the bottom was pretty much likely in. Market takes off, secondary alert. Then all of a sudden we get now a primary crash alert back here. Now this one is important because the market waffled around. You got 1, 2, 3, then 4. Finally comes down. And then here's today. So almost closing below the Kumo cloud, but it found support right at the base of the Kumo cloud, which is interesting. And as a result, we're now officially in correction mode for the second time. We topped out back here, right when we got that initial crash alert. Market came down, roared back, but failed here, double top. Failed rally. Market comes down. This hyper parabolic bar may not be the longest bar in this leg down, in this downward phase. I'm thinking we could fall a whole lot further because remember, this market came up with no real correction. This is a V-shaped recovery. This is not a real like correction where you come down and then you bounce around a little bit or whatever, move consolidatedly. You didn't. You came down, closed in the cloud, then broke out of the cloud and never looked back. Now you're back here again, sort of like testing these old supports. So I'm thinking the market wants more of the same. I'm thinking it wants to fall down again and go even further. I don't think we've really seen a correction. All things being equal, I think down here to 1500 in the Russell is in play. Around 1540 or so is in play right now for this particular market. And it is what it is. All right, so bearish we are, the beginning stages, beginning bearish weekly momentum, about to head in, put another leg down. Market's threatening to go super low. We're going to have to watch it and see, but we got a secondary crash alert. So I'm thinking we have a lot lower to go. We shall see on this one. But nasty movement on today's Black Monday. All right, taking a look now at crude oil futures, the most gangster market on the planet. If you don't know, you better ask somebody. So crude has been a very simple chart. We have here a primary crash alert followed by a secondary crash alert followed by straight downward, not even pausing for a hiccup. Then we get this secondary rally alert. We get no follow through. Market comes down again, test support. Then we get a primary rally alert. Market goes ahead and rallies, followed by a primary crash alert, followed by a secondary crash alert. I'm thinking that crude oil wants to head deeper into the $40 range. So that is what's in play right now. Beginning of another bear run, bear leg down, corrective phase off of this dead cat bounce. It tested the trend line resistance and failed as was expected. Rallies being sold. Boom, here's your oil. All right, so at the end of the day, though, we're coming back here because this is a bullish pointer. Also, because of kind of the 100-year cycle thing being into effect. I was the first person on social media to talk about the 100-year cycle. Then I heard it like the next day, basically being talked about on in the mainstream media on the business reports, and I thought that was rather cute. I'm like, oh, okay, somebody at Bloomberg is listening to old Dex. Isn't that interesting? All right, let's see here. Someone has a question. Let me go ahead and give that. Let me put that highlight there here for you. Okay, it says, Dex, what's going on with Fidelity? It's acting like a crypto exchange. High volatility causes the system to glitch. You know, that's a really good question. That's a really good question. All right, so the long and short of it, all right, you know, Fidelity was a brokerage company that put on the suit of a vanilla company. Those are those companies that are really old school, traditional, risk averse, almost acting like a bank, focusing on blue chip stocks and bonds, you know, those kind of things. You know what I'm saying? The dudes with the bow ties and the suspenders, okay, and the crisp white shirts and the patent leather shoes, you know, or the Italian leather shoes. You know what I'm talking about. But then the truth came out around the same time as the John Corazon scandal at MF Global. And in the fine print under their prospectuses, they basically break down for you that they do funny things with their assets, meaning that they may trade and do other and take other risks. So, with that being said, I did have some limited dealings with them a while back, did some trading on their platform, yada yada yada. They was alright. Um, it's hard to say what's really going on. I know traditionally, back from my Wall Street days, the firm that I was at was kind of a maverick. They were on the cutting edge of technology. This is before internet trading, before the internet as you know it today even existed. And I do recall there can be a lot of glitches and system issues, but a lot of that stuff is ancient technology. And what we have today is light years different than what we had back then. So, technically speaking, you should not be having the problems that you're having at Fidelity. Now, I did see that story earlier today, and I totally forgot to even touch on that. But I think some of the articles saying something about people's account balances showing a zero balance and all this other stuff. All right, so here's the thing. They've been around a long time. You got them, you got TD Ameritrade Thinkorswim, which I trade with heavy. Everyone knows that. I love the platform. You got Interactive Brokers. I remember when they first came out, and I was one of the first people to trade on that platform as well. They're all similar to same systems and stuff. The only thing that makes a brokerage difference is really their back office and how they manage accounts, things of that nature, what goes on behind the scenes. But as far as technology, it's pretty much the same type of thing. Um, they really should not be having those kind of issues. If it's a website thing, then there are other vulnerabilities with websites. Websites can be hacked and have all types of issues. But the trading platform itself should be a lot more stable. And that's more of a closed in type of a system, not easily, hurt. So I'm thinking there's more going on there to that story than what they're reporting to the press. You know what I mean? Like they're not really telling you exactly what's really going on. They could have been hacked. There could have been some other issues going on, but I've never seen that. I'm gonna keep it 100 with y'all. Out of all the different brokerages that I've ever worked at, all the different trading platforms I've ever traded on, I have never, ever, ever, never heard of until this day, or even seen or experienced those type of issues. The number one issue that people complain about and that I myself experienced when I ran the trade desk was execution platform failure, meaning that your trade, your tickets weren't being transmitted to the trading floor for execution. They were still being hung up in your trading platform, that kind of thing. Those are the most common types of issues. This right here is not a good thing. my antennas, my spidey senses tingling and telling me that there's some internal issue going on at Fidelity. I pray to God it's not another MF Global. All right. That's a big red flag. I'm sorry. When you start messing with the money, that's when we have a problem. It's sort of like on your job. If one week, if one payday comes up and your boss tells y'all, look, you ain't getting paid this week, that's the first hand writing on the wall that the company is in trouble. You're having cash flow issues. That is a big red flag, especially if you work for a Fortune 500 company. That is a big red flag. I'm just saying. Website issues, everybody has that. Everybody will have some type of website issues. I've even had website issues before a long time ago. Anyone can have that. You go to your website, try to get access to your account, and it says, "Oh, you got a zero balance." That's happened. You name it. You name a bank or service that's website. That's not a big deal. The issue is the money safe? Is your account okay? Can I go in and withdraw money? That is what you need to be sure of. So, those of you that have accounts at Fidelity, I know this is going to suck, but you're going to have to pick that phone up and call customer service and be like, "What's going on?" And listen to what they say to you, listen to how they say it, and then listen to what they're not saying, and do a little test. If you feel uncomfortable, do a little test. Say, okay, well, since the website's down, I need to withdraw some funds, and see how they are with that. See how easy and smooth a process that is. If it's an easy, smooth, normal process, not a problem. But if they start acting funny, disconnect the call, or what have you, or put you on long hold to try to transfer you to all these different apartments, there's a problem, a huge problem. So I'm just saying, look at the issues. Now, I'm not saying that they're having problems. I'm not saying they're MF Global. I'm just saying that this type of an issue should not be happening in this day and age. If it was just limited to their website, okay, fine. Website problems, common occurrence. It's common. All right. Banks have issues like that sometimes, all the time. I'm not even kidding. They do. It's websites are websites. But if your trading platform is bugging also, and it's saying you can't place trades because you ain't got no money in your account, okay, that's a whole separate issue. And that, my friend, is a red flag. That is a problem. That is not an error. It's not a fat finger. It's not, our server's down. No, 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 no. If the server is down, you won't be able to pull up your trading platform. It'll just be like timing out, spinning, whatever. That's a server being down. I know what servers being down look like. I know. That's not it. You can't access jack if the server's down. But if you can pull up your trading platform like you normally do, and now you are no, sorry, it don't feel right. Now, if someone has more information, I'm wide open to hear it. Those of you under the sound of my voice that have accounts at Fidelity, let me know. Were you able to trade today? Was there an issue in trading? Was there a server outage? You let me know. I like to hear from you guys. Let me know. Drop a note in the comments or in the live chat if you're listening live. I would like to know so we can get down to the bottom of it. All right, because that's a big deal. And Fidelity is a big institution. It's an old institution. All right. If they're having problems, that's scary. I'm just saying. That means somebody has done something or is doing something that they ought not be, and we need to know about it. Okay? So I'm just saying. All right? So anybody out there, let me know. Oh, I like He said if TD Ameritrade had issues like that today, you'd be moving your money tomorrow. Yeah, but now, so here's the thing though. Okay, full disclosure. Everybody knows I love TD Ameritrade. I love that Thinkorswim platform. I'm not paid from them. They don't give me no money to endorse them. I don't have no kind of contract or agreement to get people to use that platform. None of that stuff. People always ask me what my favorite platforms are, and I tell them I love Interactive Brokers. I love the TD Ameritrade Thinkorswim platform. I think their ease of use and how they work, and I just love them. Everybody knows that. But yeah, if they were having those, I put it like this: if TD Ameritrade Thinkorswim platform and/or Interactive Brokers was having problems like that, I'm not trying to scare nobody, but I'll tell you what I would do. First thing I would do, this is just me personally, I would hang up my phone after talking to customer service. I would hang up the phone, and I would get in my car and I would drive to my bank immediately and take my money out. Take out as much money as the bank has on hand to give me. Straight up. Because that, friends, is a crisis of a different kind. Okay? It's one thing for a human being to have the coronavirus, but you ain't trying to hear that your bank or your brokerage account has coronavirus. Oh, no. No. We don't play that. I have to quote now one of my favorite movies, one of my favorite lines in one of my favorite movies of all time. And I'm sure when I say this, you guys are going to get it right off the bat. All right, what movie is this? Give me back my money. What? The bank won't give somebody back their money. And then all of a sudden you see this mob of people who are in the bank run to the teller and just start demanding their money back. And they want to close their accounts. And then everyone's running around, and you got tellers putting down the gates and the shutters and taking their drawers and running, and then they slamming each other, and coins are flying all over the place. Y'all give up? Okay, that was Mary Poppins. Remember that scene when the guy's taking his little son to the bank, and he gives him a toppings to give to the bank so he can open up his first little account. You know, oh, it's all cutie. And so he gives it to him, and then the little kid changes his mind. I guess it's like, give me back my money. And then a lady who was over at the thing, I guess she was writing a check to make a deposit or something. She overhears, all she hears is, give me back my money. So she takes that to think that, okay, what? The bank won't give somebody back their money. And then everybody making a mad dash back to the teller to say, give me all my money right now. So this is hilarious. And it's funny, but it's not funny when it's your money and you can't get your money. I'm just saying. But yeah, so I notice this is what this is difficult times right now we're in. And you have to look at all the signs of handwriting on the wall. And suffice to say, like I said, if TD Ameritrade Thinkorswim is having that kind of a problem, and Interactive Brokers at the same time is having that kind of problem, yeah, that means we have a problem, folks. Before it even hits the news wires, we got a problem. And you probably want to be one of the first people at the bank immediately withdrawing funds, because you probably have maybe an hour, if you're lucky, before those banks shut down and they close the bank and say you're not allowed to take any money out. All right. So with that being said, I know there's been reports of runs on the banks in China. Let me let you know that here that will never happen here. A bank run will never happen in the United States of America. Now, some people want to shoot me and stone me for saying that I'm an idiot and I don't know what I'm talking about. But now let me give you some wisdom so that you won't be one of the unfortunate people to be embarrassed when and if a situation like that occurs. Are you ready? The reason why there will not be a bank run in the United States is not because of the FDIC. It's not because your accounts are insured up to $250,000 or $500,000 or whatever. Fill in the blank. First of all, if there was a run on the banks, the FDIC would not be able to give all those people back their money. They don't have enough money to do that. Second of all, the reason why they would not is because, don't forget, the banks are protected by the Federal Reserve, which means the Federal Reserve controls our armed forces. Don't ever think that the president and Congress control the armed forces, because they don't. The commander-in-chief of the armed forces is the federal chairman of the Federal Reserve himself. Now, some people are laughing, saying, I don't know what I'm talking about. I'm a clown, right? Because I said that. Every movie you've ever seen, tell me then, why is it that every movie you've ever seen, ever, whenever there was a bank robbery scene, why is it that you couldn't even count how many police officers and other people were outside with machine guns and God knows what else? Because one bank was robbed. And notice how they come on the scene almost instantly. You've never seen that kind of response from anything else, but walk into a bank talking about you're going to rob it and see what kind of response you're going to encounter. All right? The government don't care what you do, but don't touch one of their banks. You touch a bank and you will feel the full weight of not only the local police, but if need be, you will see the National Guard, the Army, Marines, Navy, whatever. If they can raise Godzilla and King Kong, they'll use that too. You ain't robbing nothing, touching none of their banks. All right? So what I am saying to you under the sound of my voice is there will never be a run on the banks, because the military, the government will shut it down. They will tell you you are not allowed to touch no money in that bank, and that is not even yours. So don't even you think I'm playing. I pray that you never see that I'm right. I pray that the day will never come that you find out that I'm right. And that's why there'll never be a run on the bank, because they will shoot you on sight. You think I'm playing. You think I'm being funny. I'm not being funny. All right? They don't play when it comes to that. And they will tell you straight up, the bank is closed, and they will set armed police and military gear, combat gear posted up in front of every bank. And I know you're going to say, yeah, but there's 60,000 bank locations across the country. And you don't think we have 60,000 people with armed guns that they will post out in front of there? I pray you never have to see that day come, but they will do it. Trust and believe that. All right? So, if we are facing a financial crisis of that magnitude, you better make sure you have cash on hand at all times. Only leave in the bank what you need to pay bills. But anything in excess of that, you're going to probably want to have that on hand. Because when the machines are turned off, when I say machines, I mean the ATMs and your credit card, because if the bank is closed, so are your credit cards. Yeah, if the bank is closed, your bank card's not going to work, neither are your credit cards. If there's a bank holiday or some type of financial crises of that magnitude, your plastic cards will do you nothing. Your checkbook won't help you. You can't write a check. You won't be able to use plastic. It will be cash or nothing. So you will need to have cash on hand. Everyone should have cash on hand, emergency cash on hand, period. All right? I'm just saying, folks, that's old hat. That's prepping 101, cash on hand. Because what if your bug out place, you need to leave for whatever reason? You cannot go out into the world, into the wide open, and be without cash on hand or armed. You can't. All right? I'm just saying, people, you got to understand the times we're living in, and you got to act accordingly. Now, this right here, okay, is temporary, what you see on this chart. Oil can go pretty low, but it's never going to stay low, people. I don't care what you hear them saying on TV that, oh, we got a glut of oil. The U.S. now is no longer, dependent on foreign oil. We're now the number one exporter of oil. That is BS, S. Okay? Not true. Now, I'm going to school you on a little something, something. All right. Now, when it comes to crude oil futures, as you know, every commodity that is traded on the commodities exchange, they have storage facilities for these commodities because, yes, large institutions, etc., do take delivery on said contracts. Okay, there is a huge oil farm down in the Midwest, somewhere I think in Texas or in between Texas and another state like Tennessee. I forget the exact location, but there is a huge farm. All right, of reserve. That's where all the reserve barrels and stuff go. All right, for delivery, things like that. All right, that's where it's housed at. Those are the storage facilities for the crude oil futures contract. Anyway, they got mad barrels, just mad oil there, right? But let me give it to you straight. If the U.S. was a net exporter of oil, folks, that would be saying that Texas, the state of Texas, has more oil reserves than anywhere else on the planet. You'd be like, huh? What? Yeah, let me break it down for you. Okay, so I know you guys have heard about the Alaskan reserves and how that's supposed to be like the biggest oil deposit on the planet that's untouched, untapped. And I know you've heard about the big, oil and gas, places in Russia, and I know everyone talks about Saudi Arabia, and they talk about all these things. Okay, so anyway, we know that the Middle East is basically a giant oil well. Texas does not have more oil than that. Okay, it doesn't. All right, there's spots on the planet that have a lot of oil, like what's that? Argentina and Russia and the Middle East and Alaska. Okay, we know about that. But the amount of oil that is used, not just in the U.S. but globally, is astounding. We will never be able to go 100% off oil, ever. Don't listen to the fake news. All right? Renewable energy, clean energy. Okay, that has some place in it. There's some place. There's some place with that. Oh, thanks for the correction. Venezuela. There you go. Venezuela. Thanks, man. I appreciate that. Thanks for that fact check. All right, so first of all, everything that you know of or can touch with your hands or see with your eyes has its base in oil. All the plastics and medicines and all types. I can't even name the thousands of uses for oil. All right. Petroleum and oil is in everything and everywhere. You can't be 100% off of it. All right. It's just not possible. There are too many uses for the oil. Okay. So even if we didn't use it for fueling our cars, we still have a million other uses that we need it for. And we use a lot of oil. So it is what it is. Texas can't supply the country's oil, not at the magnitude that we need. Do you know how much they would have to pump? What I'm trying to say is, how in the world is America a number one importer? Okay. It's not. Let me explain to you what that phrase means, because it's a loaded statement. It's a loaded statement. When you hear the president of the United States or any other government official claim that the U.S. is now an exporter of oil and no longer dependent on foreign oil, that is a lie. That's not the truth. They're playing word games with you. Let me explain. Okay, so America goes over to a foreign country, does all types of trickery to steal said country's natural resources, claims it as their own, and then that's how they can say now we're a net exporter of oil. How is that possible? But that's what they're doing. Look at what's happening around the world. Look at these things. Is it strange to you that everywhere where there is oil to be had, there's a military base or a U.S. military presence? Okay, so we basically are saying we own the Iraqi oil and we own the Saudi Arabian oil. We own the Venezuelan oil. It's ours. We control all of that, and then say, "Oh, look, we're an exporter of oil." No, you're exporting someone else's oil. All right, that would be like me going to your house, robbing you at gunpoint, cleaning you out of your house, taking every item in your house, throwing it outside in the front yard, throwing up a sign and saying giant yard sale. Everything must go. Any and everything you see on the yard is $1. I sell all your stuff. I take all those dollars and say, look how much money I made today. I am the #1 retailer in the country. No, that would make me a terrible #1 burglar in the country. How can I claim that I'm a retailer when I stole the retail that I sold? It doesn't make any sense. Doesn't make any sense. I just had to put that out there for you guys so you could see the real with it. I know it was a long-winded diatribe, but hey, I had to go there. That's what we do on this channel. We talk truth, we deal with facts, and we look at what people don't want to talk about and discuss. Like this next chart, people are not going to want to talk about and discuss. This here is your GDXJ, our gold miners. I want you to look at this chart. Look long and hard at this chart. This is an important bar because this is what gold did today. Now, this is the GDXJ. Now, I know people are going to say, well, it's a stock and, it got hit because of the stock market going down. And when the stock market goes down, then it's going to take stocks with it. I hear you. But this is not because of the stock market. This is because of something else. Anyone watching the gold prices saw that gold was up really nice today. But then it gave it all back on the close. Who cares if gold went to $1,700 an ounce if it closes at $1,500 an ounce? Has any ground been made? No, that is a problem. And then we have a baby pointer, a baby bearish pointer pointing to lower prices. And we have a primary crash alert to boot. And we're supposed to be in a weekly bullish momentum cycle. See this? See the little baby bull? The beginning of bullishness. Primary rally alert here. Secondary rally alert here. Breakouts. And then we reverse and come back down again. Now, I warn you, depending on what gold does tonight, this thing could pull all the way back down to the $42 handle, folks. All right? Now, I love gold and silver, okay? Precious metals. I hold some precious metals. All right? I told you I love trading in silver. But when I see something like this, I cannot ignore this. Now, we may get a correction sort of like we did back here. A little 2-bar correction. Or like this last one, 2-bar correction. All right? Or we could get a multiple bar correction. Again, we're looking at possibly going into that $42 handle. I just want to prepare you for what may come. That's all. All right? Primary crash alert for tomorrow, GDXJ. Keep your eyes and ears open and peeled because it looks like this one could go the distance back down to the top of the Kumo cloud. All right? I'm just saying. All right? Healthy bull markets, pullbacks are good. All right? To me, the pullbacks prove the strength and breadth of the market. Okay? So if not, then that's what's going to happen. All right? So this is it. Gotta watch it. Now, I like the daily charts the most. But here's your weekly chart. I got a crash alert brewing as well. taking you into next week. I'm just saying. Here's the monthly. All right. Now on the monthly chart, it's a little bit different picture. It's showing the upward thrust, right? But this bar is not yet over. All right. So maybe we're topping out here on the monthly. Maybe this was just the market sticking its head up a little bit. It's going to come back down again like it did back here. You got a 1 month head sticking up, and then you come back down. One could argue the baby bullish pointer here, and that this is where we're going, and we're going to probably stop somewhere around 55 before it's all said and done. So that would put us in a range of between 51 and 55. All right, if we talk in initial targets on the GDXJ. So I just wanted to show that to you as well, of where we could be going. But tomorrow we need to be prepared and brace ourselves for a possible crash alert, especially if equities get that Tuesday turnaround. If we get a turnaround Tuesday in equities, yeah, the GDXJ most likely will fall. All right, so now here's the euro yen. Now this is that bar that we got last week. Remember that hyper parabolic bar where it just went shoof, just ran right up. Well, here we are. We spike with bullish pointers into the Kumo cloud, then reverse down. All right. Now, the euro yen has been leading the equity market. It's already bottomed temporarily, had this rally alert here, but then we've come back down again. So this is one to watch, because if this thing continues to fall back down, even though we have the bullish weekly momentum and we got the beginning of the baby bull, if it's over just as soon as it started, then that lets us know that any technical bounce we get in the equity market will also be short-lived. But if anything being equal, this chart is also showing us that the fall, the initial thrust, which was here, was just the beginning. We have a long way to go. Even this base here, all it did was set the stage for the next leg down, which was twice as steep. So anything being equal, we got a while to go. And technically speaking, this should cover at least a month of correction. So all things being equal, we're looking at all of March being a down month for equities. So we should be falling for a minute for the next several weeks, next couple of weeks, and it's going to really be telling. All right, the next 10 to 14 days could be very rocky. All right, before we get any kind of rest, then we'll probably get that V-shaped recovery, which is something that equities love to do, the V-shaped recovery. Then we top and we fall back down again. Basically a 61.8, 62% retracement before falling back down again. So these are kind of scary charts to be looking at, because this right here is showing us that this is primarily where the market is going. Let's hope I'm wrong. Bitcoin. What's going on with Bitcoin, Dex? Well, the bear has just turned grizzly. I'm sorry to say. He's not round anymore. He's round. Okay? Not a good thing. You want this trend line support to hold. 9,000 is critical. You cannot close below 9,000 ever right now. Ever. If you do, you accelerate into the downward vortex that will take us to a level that I do not dare say in this video, because you may want to hurt me, and I don't want to be hurt. But it could be devastating. Let's hope and pray for the best. Right now, the bears are in control. You're in a corrective state, but it's a volatile, chaotic corrective state. It's not going the way and the norm that these corrections normally go. This thing's fighting it tooth and nail along the way. I'm still calling that reversal blast off From here, it's basing around the 10,000 mark, like I talked about. When I told you that that was going to happen, the market was way back here. All right, for those who've been following me. So 10,000 about thereabout is where we're putting this this support line at, which is what we should be doing. And sorry, that was the Fed chairman. He just wanting to know if he should be getting out of Bitcoin or not. And I told him that he should hold his position. You guys didn't know the Fed chairman trades Bitcoin, did you? No, he doesn't really. That was supposed to be funny. It was a corny joke. Please don't ban me, YouTube, for saying that. Okay. So here we go. I'm thinking we're going to base. I think the supports are going to hold, and we're going to take off like a rocket. I don't think we're going to really have a gradual climb. I think it's going to be just shooting up. And I think the worse the stock market gets, I think the stronger the upward strength and momentum in Bitcoin and precious metals will be. Does that make any sense? The fact that gold sharply corrected lets me know that today's pullback, today's drop was just a one-day affair. But we'll see, because I can't ignore the Euro-Yen chart. I can't ignore the Euro-Yen chart. I can't. It's frightening for the bullish scenario in equities. All right, so moving on. Looking at the Dow Jones. Now, this chart is a big, fat grizzly bear. We dropped heavy. To give you an idea of how we dropped, the high of the day was 28,754 points. The low was 27,887. It's over 1,000-point drop. Okay? 1,000-point drop. Nothing to sneeze at. All right? Ouch. Now, we're in a world, though, where 1,000 points ain't what it used to be. If this was the 90s, people would be calling for Armageddon. They'd be saying 1929. They'll be saying all types of stuff. But this is the 2020s. This is a new decade. We're almost at the 2030s. And this is nothing. We have, we're about, let's just say we're down 30,000. So we're down 30,000. We lose 1,000 points. That's nothing. The baseline support for the Dow is 12,000 to 10,000 range. That's the level of support. It's a 2,000-point support. 12,000 to 10,000 is the Dow key foundational support. Everything else is Fed stimulus. That's a lot of stimulus. We got about 20,000 Dow points of Fed stimulus. I want that to be planted in your mind. We can afford to lose a few thousand points on a pullback. Means absolutely nothing. All right? Yeah, we're going to fall some more. More than likely, yeah. You're in the Kuma cloud of death. Tomorrow's turnaround Tuesday. May close outside the cloud right here. Just setting up for the next leg down. Just saying, we're official. We're now back to official corrective territory. This chart is weird. This was the old top. We bested it and then corrected it. You bested, then corrected. So the thing is all messed up. But yeah, there's technical damage on the chart now. Officially, there's technical damage on the chart. More downside to come. Secondary crash alert for tomorrow. But I know it's not going to manifest tomorrow because tomorrow's turnaround Tuesday. We probably have a bullish day. All right, so here is silver, still going, still powerful. And I don't know, folks. I mean, I think the market's going to keep going. I think 19 and 20 is in hand. You're bullish. All right, looking at gold, like we talked about, here we go. Gold futures, still strong, folks. It ain't going nowhere. I don't think the market's going to go too far. I think it's going to stay pretty much where it is, and it's just going to keep it moving. We got a bullish pointer. I think the market wants to go higher. All right, let's see here. This is, I think I pulled up two different Bitcoin charts. So let me get out of this one. All right, this is the US dollar index, which is trying to go par. We got this bear right here at the beginning of a bear market afoot. We had a primary crash alert followed by a secondary crash alert today. I think the trend line support back down to 98 is in play if we get followed through. All right, I got a question here. It says, what do you mean by technical damage on the chart? Technical damage means any type of price action that changes the overall trend or direction of the market. So that's what we had on that Dow chart. It was technical damage, where it was showing that we had shifted from a bullish to a bearish bias. So that's what the technical damage on the chart means. All right, let's see here. Next question. Do you think we're going to fill that gap on the gold chart before we go higher? We talked about that before, and that's exactly what I'm thinking. I'm thinking that's the healthy thing to do. You want to take care of your gaps and pointers before the trend really gets underway. If you don't, then it's a weak trend, and you don't want to really be partaking in it. And that's just keeping it real. That's keeping it 100. Now, a word on this 100-year cycle thing. It is kind of looking like it wants to play itself out starting today. It's a weird thing. It's hard to really explain outside of the algo charts, which you just finished looking at. It's an algo thing. History likes to repeat itself. Cycles and trends like to repeat themselves. It's just a kind of thing. And that's because human beings are creatures of habit. And they like to do what feels natural and comfortable. We don't like to do the hard thing. We like to do the easy thing. Take the path of least resistance. And right now it's looking like it's playing out the same thing. Look at all the similarities. Look at the go-go 20s of the 1920s. All right? And then look what happened in 29. I'm just saying. Isn't the same thing, similar things happening now? All right? Now, we just started. This is the year 20. So if that's the case, we got the whole decade to rock. And then when 29 comes, that's when they usher in the New World Order. You'll see all types of references to 1929. You'll see documentaries made, and you'll see all types of videos and videography and all types of things and them talking about it, even though you heard it here first. And then all of a sudden you'll see this huge collapse followed by some type of economic depression. But this one would also lead to war. And then out of that will be your new world order, your new slave society under the technology grid. So, yeah, that's kind of what I'm seeing. So, I like that saying, the ghost of FDR is still waffling about. Yeah, right? Yeah, now, I mean, I could be wrong. I've been wrong about things before. All right? I've been wrong about things before. Just like when I thought that Hillary was going to win the election. I was wrong about who was going to be sitting in the Oval. But I wasn't wrong about the market's response to who would be sitting in the Oval. That part, the market part, I was spot on, but the as far as the actual president, I was not. See, and that just proves that you do good to stay in your lane. I ventured out of my lane and tried to predict the president, and I was wrong. But I was right about how the markets would respond, and I warned in real time what was going to happen. When it looked like the world was coming to an end that night, I said, watch this V-shaped immediate recovery. Watch this monster rally. Don't be caught short. And sure enough, the market erased all of those losses instantly and just chopped people's head off that night. So, just saying. All right, someone has a good quote here. Deregulation brought Great Depression, and deregulation will bring Great Depression too. That's a very good point. That's a very good point. What have we been seeing lately? We've been seeing the easing and relaxing of certain banking laws and restrictions, and flipping over Glass-Steagall and that other one that always eludes me. I don't know why, but I mean, it's really not deregulation, folks. I don't like to use that word because they've kind of muddied the waters with that terminology. I like to say corruption. Corruption. Because at the end of the day, that's what it is. It's corruption. Corruption is what kills a society. Corruption kills countries. Corruption kills superpowers. And that's just something to think about. All right, I'm exhausted. I'm about to fall asleep while I'm talking. So I must end this video. It's been a lot longer than I ever thought or imagined that it would be. I just knew we had to really talk about the things that went on today. So with that being said, remember PulseWaveTrading.com, folks. For $69 a month, you can get started trading these price triggers. And we got some neat little things all put up in a box and tied with a bow and a ribbon on it for you. PulseWaveTrading.com. And remember, folks, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I will see you guys back here first thing tomorrow morning for pre-market pulse scan. And I'm really excited to see what these overnight markets are going to do while we are sleeping. And for those of you on the other side of the world where you're wide awake while we're sleeping, get those stops in place. Don't turn profits into losses. Tighten up them stops. All right? Love you guys. Smash that like button. Share the video with someone you never know who it may help or encourage. And hit that like button and click that bell icon so you can be notified of new content. And with that, I will say peace and good night.